Hello, guys. Good morning, good afternoon, evening. Welcome back to Einstein Capital YouTube channel. I I made this video earlier for my private students, but I decided to make it public, right? Decided to make it public for everyone to have access to this type of knowledge, right? This is something that I've been clamoring on for the past few months. Flip zones, flip zones, flip zones. Flip zones gives the best entries. This is why I like them. Now you could have your direction right? You could have your direction right, but you could have the entry wrong. This is what flip zones came in and fixed in my trading, right? Like the title says, flip zones, right, changed the game for me, right? It's literally changed the game for me. Previously, I would show you guys what I was doing if I was trading the previous way I was trading, right? I could have gotten a loss here or not had this win. But with the understanding of flip zones, you can be ahead of the game and literally make money for yourself, right? So let me just jump into this. So this is basically the trade that I took. I took this trade today on Saturday. It activated on Saturday, and profit was made today, right? So I'm going to show you guys the simple process on how I was able to catch this move, right? So I'm going to use the replay tool and everything together so you guys will see it in action. Let me just clear out all right. So starting from the higher time frame, so let's go to the daily time frame first. So on the daily time frame, what can you see on the daily time frame? I can basically see that market has swept liquidity here and we've broken structure, right? Yes. And we also took out this internal range structure. These are all signs that the market could be bearish, right? All signs that the market could be bearish. Now you come into this chart right now, and I go on to looking at is the market respecting supply zones. Like if a market is selling, that means it's what is respecting supply zones. And if it is buying, right, if it is respecting demand zones, right? It is respecting demand zones. And if it is selling, it is what? Disrespecting demand zones. That is the first way to determine bias, right? Then I started asking myself, what are the other key points? Number one, sweeping of liquidity and breaking of structure in the opposite direction. Now you can see we swept liquidity right here, and we've broken structure right here too, right? Those are the first key points. And then we start to respect, let me go to the 4 hour time frame. We start to respect what? Supply zones. Start to respect supply zones, right? This is your engineered liquidity right here. Just delete this. And we are respecting what? Supply zones, right? Now looking at this right here, what can you see again? Market keeps on respecting supply zone. These are what? This is a breaker block right there. This is a breaker block right here, right? Market is respecting selling zones, right? Market is respecting selling zones and disrespecting buying zones. So that means why it knows what? When it sell order flow. So looking at this chart right here, I can basically see that, okay, the market is selling, right? And we've not had any break construction to the upside yet, right? We've not had any break construction to the upside. So definitely, if you come into this chart right here, right? Let me use the replay tool. So at the end of Friday, what could you see? You can see that, okay, market wants to sell. The market basically wants to sell, right? The market wants to sell. And you can spot out easily this fair value gap right here. This is a what? A 4 hour fair value gap zone. So a 4 hour fair value gap. Right? This is an area where you should be an area of interest where you should be looking to what take action from. right? Number two, I cannot go to the line chart and see, okay, this is a what? This is my key level, an area where I'm looking to do what? To sell from again. And that key level is inside a 4-hour fair value gap. Now, if you want to take this sell, of course, you can use this O zone, which is not advisable. You can use the 50% of this zone, right? And take the sell from there and just mark it out like this and take the sell from there. But this is rookie trading to me. You need to be specific in the zones, in the area that you want to take the sell from, right? You can do this and also do what? You could also what? Benefit from the trade, right? But what I did, right? I went down to the 1 hour first. Then I went to the 30 minutes time frame. Then I asked myself, right, is this liquid? Let's go to the back to the 1 hour. Okay, let's go back to the 2 hour time frame, sorry. Right. You ask yourself that this liquidity that is right here, what sort of liquidity is it? Is it time-based? Now, I only deal with what? I mostly deal with time-based liquidity. Time-based liquidity gives me edge over the market, right? Time-based liquidity basically means what? High of the day, low of the day, high of the week, low of the week, high of the month, low of the month. These are important liquidity zones that the market uses to do or to move right from one price to another, right? And if you are trading, just if you're using any high or any low as liquidity, you would have lots and lots of what? Losing trades. This alone eliminated a lot of losses for me. It eliminated a lot of losses for me. I cannot lie to you. You feel me? It eliminated a lot of losses for me. So what I did was, is this a what? A time-based liquidity? And to my surprise, it isn't. Right? This is not the high of the day. This is not the low of the day. This is not anything. This is not even the high of the New York session. Right? If this was the high of the New York session, I would have used it. I would definitely have used it. So I have to be very, very patient for the market to do something the next day. Right? So what did I do? I went down to the 30 minutes time frame. Then I went to the 15 minutes time frame. Now, on the 15 minutes time frame, what's this? It is 115. Now, on the 15 minutes time frame, I now spotted my flip zone. Now, if you are new to flip zone entries, if you are new to flip zone entries, it's basically this, right? Flip zones are what? Supply inside demand, or demand inside supply. This is as easy as I can put it. This is as easy as I can put it, right? Now let me just draw out the two. You have a demand zone. Market comes to demand zone. Normally you should buy. You use a buy reaction and then break structure to the downside. It must break structure to the downside. And then you have this liquidity build up, engineer liquidity, tap into the flip zone, sell off. Same thing for the buys, right? You have a supply zone. Market comes into the supply zone, gives you a reaction, and then breaks structure to the upside, right? And then gives you engineered liquidity or structural liquidity, anyone. Let's use engineered. Let's use structural. Comes back, taps, bye-bye. Right? This is your what? Liquidity. This is the flip zone entry, right? As easy as it can be, right? As easy as it can be. The supply inside a demand inside a what? A supply, flip zone. All right, so let's go back to work. So what can you see here? I can see a what? I can see a demand zone, right? The market has done what? On the 15 minutes time frame, the market has done what? Come into this demand, giving you a what? A reaction, and then breaking structure to the downside, right? This is what? This is a valid flip zone. But it becomes more valid, right? Once we have proper liquidity. Let me just play this forward a little bit into the next day. So on Saturday, we had this. On Saturday, we had this. So the market created this. This became rather the eye of the day. This became the eye of the day. Let me turn on the session indicator again. The eye of the New York session. This is the eye of the day. Asia, London, New York. This became the eye of the day. So liquidity has been engineered. Then the next step for us to do is what? So mark out the level that I want to take the sell from. You go to the line charts. Right there. Easy peasy. Right? This becomes my liquidity. Right? Let me just delete this. And then I can take my sell directly. Right from here. And stop loss just above this eye. Right? Right? To be safe. And then you can target where? This low. For a 5-hour trade. For a if you are risking $100 on this trade, you're going to be making a return of what? $500. This is how trading is. You need to have what? Patience. Let me just play it forward now. All right, we've been triggered. Like, so this is basically how I was able to, catch this move. It is very, very simple and straightforward, right? It's a very, very simple and straightforward trade. And that is that for TP. And that is that for what? For TP, right? That is that for TP. So guys, if you guys learned a lot of, if you guys gained something from this video, right? Give me a like on this video, give me a subscription, subscribe to this channel. And if you really like my content on trading, you can join my free public community where we exchange ideas together. You can chat privately and publicly, right? Let me just show you what I mean. Because I have trying to so you guys, so this is my public community. We have 460 over 415 members right here, right? And I share, Web3 stuff. I share crypto stuff. I share trading insights, trading signals, right? Free trading signals. And yeah, you guys really want to join the public community, the link will be in the description of this video. Just check the description of this video and you can get started. All right. And that'll be that for me. That'll be that for me for this thing. And you can follow me my Twitter, iStand Capital. Just ask me on Twitter, X iStand Capital. I'll give you a follow back. Peace, guys. Please don't forget to share this video. Bye.